How does time-weighted return measure investment performance? Imagine trying to see how well your investments are doing without being confused by when you add or take out money. That's where the idea of time-weighted return comes in. It's a way to measure how well your investments perform over time, focusing only on how the investments themselves grow. It helps investors and portfolio managers see the true performance of their assets, without the noise of deposits or withdrawals. To do this, the total time period you are measuring is broken into smaller parts called sub-periods. Each of these starts whenever there is a cash flow, like when you deposit money or withdraw some. For each sub-period, you look at how much the portfolio's value changed from the beginning to the end, adjusting for any cash flow that happened during that time. This way, you isolate the investment's actual return for each segment. Once you have the return for each sub-period, you multiply all these growth factors together. Think of it like compounding interest, where each period's growth builds on the last. After multiplying all these together, you subtract one to find the overall return for the entire period. This gives you a clear picture of how the investments performed, independent of when money was added or taken out. This method is especially useful when comparing different portfolios or fund managers. Since it neutralizes the impact of cash flows, it shows the real growth of the investments. For adults managing their investment plans, this means they can see which choices or managers are truly delivering results. It's a fair way to evaluate performance because it focuses only on how the assets themselves are doing. In essence, time-weighted return measures investment success by breaking down the timeline into segments based on cash flows. It calculates the return for each segment and then combines them to show the overall growth rate. This approach makes it easier to understand how well an investment has performed, regardless of when money was added or removed. It's a reliable way to see the pure performance of a portfolio, helping adults make smarter investment decisions.